Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Empire Fintech Conference in New York City. Joining us for this segment, we have Jelena McWilliams. She's a partner at Cravath, Swaine Moore. We're going to discuss legislation, innovation in the fintech space. Jelena, it's great to have you with us. Welcome to Trade Talks.
Thank you.
Let's talk about the impact of fintech innovation on consumer credit in the banking system because it moves so fast.
Yeah, it's a great actually topic to discuss because frankly, before the fintechs, the consumer credit could be only gotten on in two different venues. One was the banking system, one was the non-banking systems, and that would be primarily payday lending, pawn shops, et cetera, et cetera. And so when the fintechs broke into this space and used technology to offer credit to consumers, they created a new pathway for people like me 30 years ago coming to the United States with, $500 to have access to credit in a way that banks have not been able to. And so what we have seen in the last few years is that the access to credit has expanded for consumers that are subprime, Alt-A, so slightly below prime, but also prime consumers as well. And we have seen actually better quality credit in many cases flow to those consumers than it did in the past. So I think there is a symbiotic relationship between access to consumer credit and fintechs, and I also think there is a symbiotic relationship between banking system and fintechs, because now a lot of banks are using fintechs to access a broader consumer base and offer more products and offer basically better kind of credit.
Well, I think what's interesting is banks used to tell you what products you wanted or what were available to you, but I think with the influx of fintechs democratizing that access, consumers are driving more of what product is available, and banks are starting to listen.
Yeah, absolutely, and you'll see a lot of banks teaming up with some of the fintech, frankly, platforms that are present at this conference today in a way that would have been unforeseeable even 10 years ago. Basically, consumers have greater choice through this platforming of fintechs.
What are some of the opportunities and challenges that you're seeing in the fintech space? What areas are most attractive?
So I will say that consumer lending is probably one of the areas, especially as we're looking at tightening economic conditions, where we'll see fintech expansion be important for access to the low and moderate income Americans. The other thing I think is really crucial is going to be how the regulators look at the relationship between fintechs and banks, because in the end, as a third-party service provider to a bank, the responsibility rests on the bank to make sure that the fintech does everything correctly in compliance with the prudential banking laws and consumer compliance laws. And so where I think we're going to see some tightening of the regulatory expectations will be how regulators look at banks that team up with fintechs and how those fintechs are perceived by the regulators. So I cannot stress the compliance with risk management, consumer protection, and general banking laws more than I could otherwise in these circumstances.
Do you think regulation is keeping up with the pace of innovation?
No, it never is. It never will. I'm a former regulator. I spent a little bit of time in two agencies, the Federal Reserve and the FDIC, and I will tell you for a fact, the government agencies are never going to be on the cutting edge of innovation, right. And it's going to be really difficult for them to follow technological advancements. The best they can do is to be open-minded, to understand how technology affects consumer credit, how it affects the banking system, and to be open to learning along the way, but they will never be really on the same page as the most innovative products and offerings, and maybe it's not supposed to be that way, but hopefully the regulators adjust.
You had mentioned democratizing access to lending for consumers and so forth, but how do fintechs bridge that gap? Because you have to have risk management.
Yes.
You're going to take on more riskier loans and so forth. So how do they manage that intersection? Like when we think of buy now, pay later, I have a really hard time digesting what that could potentially do to consumers, especially in an environment where credit is tightening, where inflation is hitting pockets, where potentially we could see layoffs. How do you balance risk management and protecting consumers?
It is always a tough act. I mean, there's no ifs and buts about it. It is a tough act. It is important for these fintech platforms to basically have good understanding of where the risk lies. Their underwriting models may work for a current snapshot in time, but to your point, if we go into a recession or if there are worsening economic conditions, people losing their jobs, as we saw at the onset of the pandemic, that is something that actually it's really hard to model because some of these things cannot be anticipated. You can anticipate different economic models. You cannot anticipate something like a pandemic and hourly wage workers losing jobs. So it is something that frankly more and more fintechs are focusing on. The super early stage fintechs won't have the means to do that appropriately. So I strongly urge them to seek outside help in making sure that their platforms are set up in a way as they grow, that they don't violate consumer protection laws, etc. For the more mature fintechs, I think they have adjusted over time, and in a lot of cases they have very sophisticated risk management systems because they have to. Otherwise the banks would not be onboarding these fintechs. So you saw about a decade ago, you saw a more controversial relationship between the banks and the fintechs exactly for that reason. And now you're seeing them kind of symbiotically work together in a way that, in the end, I think benefits consumers the most.
I mean, it also makes sense for the banks too. Instead of having to reinvent the wheel, acquire that technology where these smaller companies are more nimble, but then you scale it up with your consumer base. So it seems like it makes sense to me for them to work together versus an us versus them attitude.
Absolutely,
Right.
It can be a win-win situation
Right.
so long as both the bank and the fintech are equally focused on risk management and compliance.
All right. Appreciate the insight, Jelena. Thanks for joining us
Thank
on
you
Trade
so
Talks.
much.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.